Approved for the first time. There we go. U.S. regulators have given the thumbs up to these ETFs that invest directly in Bitcoin. Let's hear from the SEC themselves.
I'm delighted that we're at the end of this saga. I know there's still pieces of it to go, but I think this is a big milestone.
Right. Rebecca Sin is with us here on set, our ETF analyst, to talk us through what's next. And we have 11 that have been approved. What's the difference between the 11?
So the main difference between them is ultimately how much assets they're going to get on day one.
Okay.
And that's been one of the issues. We are expecting more than 30 billion in assets to come through, but a large chunk of this is really from the Grayscale Bitcoin Trust that has 28 billion that's going to be converted into an ETF. And because they have the size, they've also kept their fees at the highest amongst all of the ETFs. So they were historically at 2%. They've now lowered their fees to 1%. But you have to remember that 6 other ETFs are being offered for free, 0 basis points. And so in terms of the main difference between these ETFs, we're going to see tomorrow how much comes in. BlackRock, for instance, has about 2 billion in assets under management. And from a one-on-one perspective, this may be one of the largest ETF launches ever globally. And so some of the other ones that are at the top is BlackRock has a few ESG ETFs that are around 2.1, 2.2 billion, but this could be one of the largest ETFs. And if we look at all 11, this will definitely break all records for ETFs globally in terms of ETF launches.
Rebecca, I mean, the thing is, do we need... This is a speculative asset class here as well. It's getting more speculative, but the thing is, if you take a macro look, this is another stamp of, I suppose, approval in a way. Now, what's next for the Bitcoin evangelical community here? I mean, they need to find a use for it to then essentially say that this is what we were really, really after fundamentally.
So one of the big debates was that virtual assets started because they didn't want to be regulated. And now, in essence, we've taken an unregulated product to make it regulated and having it list on the exchange. And one of the main reasons why this is such a big deal is that ultimately a lot of people that were investing into the virtual assets, there were hacks on exchange, there are lots of fraudulent activities. Now it's ultimately giving retail investors access to this virtual asset in a safe environment. They're going to be listed on the exchange. Even if the exchange gets hacked, your money will be safe. And they're using regulated entities as custodians. So, for instance, for all of these 11 ETFs, most of them have chosen Coinbase as their custodian, but there's also Fidelity, Gemini, and BitGo. And so one of the things that makes it exciting is ultimately retail investors can get access to virtual assets in a safe and secure way. And so what we expect next is, now that Bitcoin has been approved, the next one is ultimately Ethereum. We think Ethereum might be the next one where investors can get access to virtual assets.
All right, Rebecca, thank you so much. Bloomberg Intelligence ETF analyst Rebecca Sin.